The death zone. That's what we're going to be talking about on this triumphant Tuesday, ladies and gentlemen. We are going to be discussing in this cryptocurrency market update the death zone, which is a term coined by Morgan Stanley analyzer Mike Wilson, somebody who I give a lot of credibility to. And the reason we're going to be doing this is because we're going to be looking at the alternative argument to the one that I'm putting forward. So I have a bias. We entered the market at the start of this year. With the benefit of hindsight, it was a very good decision, and we've done very well as a result of this. We did publicly come out and say this on the channel, certainly early January, and of course was updated a lot sooner for my Patreon members. And if you guys want to take your investment level to that next level, your investment journey to that next level, start of the month coming around tomorrow, feel free to join the Patreon. If you don't like it, you can always cancel. But I have a bias in the markets, right? So I'm positioned essentially spot long at the moment. And that's because I believe we're going to see more upside. You know, we're tracking this reverse head and shoulders. And we've stated the fact that we think that you are going to take that 30K level very, very fast once we get a break of this 25K neckline. And we're currently in what we're calling a right shoulder. And we're looking for the fib levels to come down to and potentially act on. Now, there is, of course, an alternative. I would say there's more positioning towards the bear side than there is the bull side. Everybody's waiting for a crash to occur. And I think there will be a crash, but it's going to happen when not everybody expects it. So right now, everyone's staying out, everyone's scared, everyone's worried of the crash. The macroeconomic backdrop is crap. And I think that sets the fertile grounds for people to get wrecked not being in the markets. What I think is going to happen, and I'm going to envision this moving forwards, is we're going to continue this rally. It's going to be very great. You're going to end up with people who are still bearish finally having to throw in the towel and say, okay, we're going to buy, but it's a significantly elevated price, and then that's when the crash will occur if there is going to be one. And this is something that Yilko suggests with its kind of not predicting the crash until point of uninversion. We've looked at all this, but I want to look at a adversary to my own opinions and actually give it credibility. You should be able to look at both sides of an argument and find points of merit and points that you disagree with on both sides, even your own side. Okay, there's no 100% in the game of trading. It's a probability-based thing, and you have to basically take the path that you think is going to lead you to victory. And that's what we're doing, largely positioned as spot long at the moment since the start of the month. We had a discussion on the 5th of January, which, by the way, everyone was pretty damn bearish down here, which has turned out to be the right thing. We've done very, very well whilst sort of lots of people have been silent. But Mike Wilson's talking about the stock market, so we're going to be looking at the stock market. You know, we have looked previously at the stock market against the likes of Bitcoin. Sorry, this is gold. This is the stock market. And we think that essentially Bitcoin has broke out against the stock market. And there's been this huge correlation for assets, really with what the Fed has been doing with their rate hiking regime and other central banks that has constricted liquidity, i.e. caused assets to sell off. And everyone's trying to second guess, well, when does this come to an end and how much further is there to go? And this is what we've seen really since the start of February, repricing of that. But let's get into this article. Let's read it, and then we'll talk about other interesting things. Something from Ivan on Tech talking about MakerDAO retrieving, I think, some of the wormhole funds from somebody by a court order. It really questions the whole kind of DeFi relevance. But let's get into this article, guys. I'm going to go ahead and minimize my face, and then we're going to talk about it. We're going to look at it in relation to the stock market, and I'll give a few thoughts and comments. So, US stocks are in the death zone and could crash 26% within months. Morgan Stanley's top strategist says. So, referring to Mike Wilson. Mike Wilson is somebody who I actually am a big fan of. I think he's made some phenomenal calls. The US stock market have surged to highs and are now in the death zone, Morgan Stanley's Mike Wilson said. Investors have followed stock prices to dizzying heights. Once again, he warned in recent notes. Wilson has predicted that the S&P could crash 26% to 3,000 points within months. The US stocks have soared to unsustainable highs, but investors are behaving similarly to climbers who blindly pushed on towards the top of Mount Everest without properly considering the risks, according to Morgan Stanley's Mike Wilson. The bank's chief US equity strategy said Sunday that he sees similarities between current valuations and the death zone, an area just below the summit of the world's tallest mountain, where there is so little oxygen that the human body starts to die minute by minute and cell by cell. Oh, this is terrifying, guys. Many fatalities in high altitude mountaineering have been caused by the death zone, either directly through loss of vital function or indirectly by wrong decisions made under stress or physical weakness that lead to accidents, Wilson wrote. This is a preferred analogy for where equity investors find themselves today, and quite frankly, where they've been many times over the past decade. He added, I love that he's comparing the stock market's rally, looking at the old S&P, with the death zone, because you've climbed out of this and you're now at this high altitude point where the question is there enough oxygen? Is there enough liquidity to sustain us? Well, we're going to go on to find out his thoughts. In Wilson's metaphor, the death zone represents the excess level that stock prices have climbed to since the start of this year. The benchmark S&P 500 index is up 6% year to date, while the tech-heavy NASDAQ composite has jumped 13% over the same time period. Yes, it has. So the NASDAQ's done well. Beautiful double bottom here. You've got bullish divergences across the board, which is something that we looked at. Let's continue to read on. The bench. Okay, so investors have scooped up stocks as they expect the Federal Reserve will start cutting rates by the end of this year. Yep, we've looked at that. There's been a slight repricing of that, though, which is why we've seen markets adjust. Lower rates tend to lift stock prices because they support higher spending and cheaper borrowing, boosting the future cash flows that make up a core part of companies' valuations. Wilson has repeatedly warned that the market rally won't last. He expects inflation to prove stickier than many expect, forcing the Fed to hold rates higher for longer to bring soaring prices under control. The bear market rally that begun in October from reasonable prices and low expectations has morphed into a speculative frenzy based on the Fed pausing pivot that isn't coming. I agree. It's not going to come for longer. He wrote in the last note, Wilson said, since 2022, the S&P is likely to bottom out at 3,000 points this year, 26% below the 4,000, just slightly below that, where it's currently at. That's noticeably more pessimistic than most Wall Street. Some top market voices, including Wharton professor Jeremy Siegel, have voiced support for bullish no landing outlook. Yeah, I'm not sure about that. Compared to the hard or soft landing in the no landing scenario, the Fed is able to bring down inflation to 2% without having any real negative impact on the economy. Thanks to the scoop for rate providing by the US strong labor markets. That sort of optimism is just another symptom of the death zone, according to Wilson. As stocks have reached even higher levels, there is now talk of no landing scenario, whatever that means, he said. Such are the tricks the death zone plays on the mind. One starts to see and believe in things that don't exist. So I actually agree with a lot of what he's saying. You should be cautious here, right? You are in the death zone, because the problem is if this rolls, and you've already seen this, look at the momentum behind this. Why have we seen, do your Japanese candlestick analysis and your TA. You climb up and you go out the window. And it's because the fear in this market right now, it's why these sell-offs are massively amplified when they do come. It's why you see these big down legs for Bitcoin on the smaller time frames. I won't say big because, I spend quite a lot of time on the small time frames, because people panic and they get out their positions very, very quickly. So are we in the death zone? Potentially. We'll see. And what invalidates it? Well, does a higher high invalidate it? Potentially. And you're actually not looking too bad. The big area to take for me, where I'll flip bullish on stocks, I think there's 1,000,001 reasons not to be bullish on stocks, by the way, because they are overvalued as hell. Also, right now you get better yield from the fixed income market than you do the stock market, and you're taking on a hell of a lot less risk. So once you take this, his death zone's out of the way. And then you're in the full throttle zone, or whatever the adverse of the death zone is. The heaven zone, maybe. Or the life zone, I don't know. But until then, you are on shaky grounds. That's for sure. And it's really going to be a case of seeing what happens. So he's calling for the S&P to trade right the way back down to here and putting a new low. And there is definitely the potential for that. I was of the camp, by the way, really up until around here when we started to see the dollar roll, that we were going to get this sort of 2008 style medley, This was going to happen. I can't help but feel like potentially it won't, because everybody's expecting it. And actually, if you look at the data that we're getting, it's coming out a lot better than most people are predicting. And this is the interesting thing right now. But Bitcoin, I think, actually is likely, with regulatory clarity coming, to massively overperform any other asset class. And once you get that regulatory clarity, you allow all the big boys and institutions, central banks, et cetera, to get on board with it. This propels it to the tens of trillions, being a $1 trillion market cap asset at the moment. So you guys let me know in the comments. Do you think we're in the death zone? I think Mike Wilson has some amazing comments there. I love the fact that he's comparing it to the death zone of Everest, and he could be right. I just happen to be positioned that I think we're going to do quite well, and that the crash is a little bit away. We will eventually have a crash, but I think it just doesn't feel like, I mean, you look at crypto, for example. This was FTX collapsing. We're above and beyond it now, guys. Really, the things to watch. This is what we're watching for structurally. I don't want to butcher it again. We're looking for this head and shoulders. Wherever the right shoulder comes to, you got your fibs to look out for. Watch the dollar. So the dollar looks pretty weak yesterday. Where did it find a bounce here? And it's potentially come up and retested this as resistance, and maybe looking for that downside. So that's going to give the cryptocurrency market some credibility, or not credibility, some kind of a decent bounce. But gold isn't kind of acting in a good manner. You could pop up to the top of this, but you'll see. You take out this high, you're looking for highs. But it's very common, I've found, in falling wedges that you pop out the top of it just to get all those shorts out, and then you spill. So we will see. I mean, crypto, there's definitely scope for more downside. Can you see how you run into all this liquidity up here? Very, very common on a sell-off. You'll sell off, everyone will get short here, and they'll think they're in profits, and then it'll come back and take them all from you before it looks for that continuation. So there is still definitely the target for lower prices. Remember, in the month of March, we've got the rate hike, we've got the CPI. We're going to have to track and watch all this. I was going to go into the Make a DAO drama, but I think I'll leave that for another video. And we are seeing sticky inflation across the board, and rates being priced in a lot more harshly. The question is how does crypto do in the face of this? US market is relatively stagnant. Asian market was up this morning. Down relatively this morning. Dollars stagnant. I think we're in this kind of no man's land until we get definitive answers on rate hikes and inflation. That's all I've got for you in this video, guys. Do you agree with Mike Wilson? I think he's got some great points, and partly agree with him. I just think that there's more of a risk for me being sat out the markets this year. We've been sat out the markets and avoiding the FOMO all of last year. This year we said, okay, let's take a punt at this, but let's keep some ammo in the chamber just in case we're wrong and we need to have another stab at trying to pick where the bottom is. All I've got for you in this video, guys. You enjoyed the content, like, always appreciate, so as a comment, and I'll catch you all in the next one. Thanks a lot for watching, ladies and gents.